Welcome to Online Principles of Accounting. My name is Ms. Horn and I will be your instructor. In face-to-face classes, typically students will ask me who uses accounting and why do I need accounting? So for me to answer this question, I have pulled up the income statement for Apple. And as you can see, the income statement shows revenue. So let's think about what Apple sells. Apple makes most of their money by selling iPads, cell phones, the iPhone, iPods, and their Apple apps. So this is the amount of sales that Apple has as of September 29th, 2018. So basically for the year of 2018. So the total revenue is let's round 266 billion because all these numbers are represented in thousands. And then you also see the cost of revenue. So this is the amount, the revenue is the amount of sales, and the cost of revenue is the amount that each of these products cost Apple. So if you subtract, the gross profit is the amount of profit that Apple makes from their sales. So the gross profit is for Apple in 2018 is approximately $102 billion. That is a lot of money. And then you can see down that there are other expenses. You see research development expenses or research and development expenses. And they've lumped this selling general and administrative expenses together. And then we have total operating expenses. So these are some things that you'll learn about later in the course. But I wanted to talk about who looks at these financial statements and why do we need these statements. Well, first of all, investors will look at the financial statements because investors need to see is Apple making a profit? Are investors seeing a return on what they've invested into Apple? Also, if a company is profitable, investors will receive a dividend sometimes, and we'll talk about dividends later in the course. Also, lenders. The bank, if the bank has loaned money to Apple, they will want to see is Apple making enough of a profit to pay off or pay back the loan. This is very important to the lender. So it's really important to understand that creditors and investors look at the financial statements. So what does the actual accountant do with these financial statements? Well, first of all, the accountant is the person that takes the business transactions, every single business transaction, and they record these transactions into an account. So for example, even though we see selling, general, and administrative expenses lumped into one category, if you work for this company, you could go in and see each individual expense and how much was spent on salaries or employees' expenses, and how much was spent on, let's say, marketing or advertising. So the accountant is the person that goes in and records these business transactions into the actual accounts for the company. And that is exactly what you're going to do in this course. You're going to take business transactions and you're going to learn how to record these transactions into their individual accounts. And so I hope that maybe this helps you see what we'll be doing. And if you have any questions about this class or any problem that you're having trouble with in this class, feel free to reach out to me. You can text my Google Voice number or message me on Canvas. I'm always here to help.